Good day, guys. I hope you're keeping safe. Before we start the session of today, kindly note that the opinions expressed in this video are for general information purposes only and are not intended to provide a financial advice. Now that is out of the way, um, we can look at the charts. Our first video, we spoke about easy equity in terms of how to browse, and then the second video, we spoke about support and resistance and the tools that each trader should have when investigating the charts. Today, I wanna just talk about two things, as you can see the topics for discussion: trading plan and the trading method that uh, I want to share with you. It's a simple trading method that we're gonna use to analyze all our chart. Um, one of one of the followers suggested that we should investigate, just have a look on ARK investment. So the presentation for today, I will also be using the chart for from ARK investment just to see how their share look. Is it good um, to trade? Is it a good share to trade at the moment, or is it something that you should be observing before opening a position there? Okay, just on the trading plan. Um, a trading plan, it's more like your strategy. What you as a trader, it's like you're setting targets. Um, like here we are trading shares, so the movement is not with the volatility is not very high. So the trading plan, it's more like a medium to long term. So I would suggest that if you draft a trading plan, at least you should be at minimum looking at 3 months, and then to maximum 6 months, where some other people can keep it for maybe a year. You'll be tracking your trade. For example, let's say you wanna deposit and invest 2,000, and then you're looking at uh, a profit of 50%. So it's possible you can do 50% within 3 months. I think that's achievable. And then maybe depending if you're gonna take that money, the profit that you make, and then you look for another share and reinvest, and then you keep on with the series of generating the 50%. Yeah, I think that will be a reasonable trading plan. Or you can reduce your risk. You trade more instruments, more shares that are not volatile, and then maybe target 10 to 30% within the space of three months. Okay, so that'll be your trading plan, and then in your trading plan, you also encompass your trading methodology, your trading method, because the plan is just to see now, okay, in this time frame, this is where I want to be, but as well within those time frame, this is what I will use to achieve uh, these set of percentages that I set for my on my trading plan. Okay. On the chart, the chart that you see, we're talking about the ARK investment, and Cleco suggested that he wants us to look at it. So I will have it on the chart, and then we'll be implementing what you see now on the topics for discussion. So this is what I would suggest us will be using from now on. So we'll be using a 9-day moving average together with the 30-day simple moving average. So a moving average, what it does, it add like the 9-day moving average is adding like 9 candles and then takes the midpoint of those candles. So it will add all these 9 candles and then take the midpoint of those candles, each candle's midpoint, and then we determine the line of where the price is moving. So you find like the 9 day, since it's taking like few candles, it's close to the price. So the 9 day will be close to the price. So I will add the 9 days so you can see there on the screen. I've already went there and then selected the moving average. So the blue line, it's a 9-day moving average. So the 9-day respond quickly to the price. So this is what I recommend that we'll use, 9-day moving average. So these two, the 9-day moving average and the 30-day moving average, it's what's gonna be on the chart. This is what's gonna be following the price movement. Okay, I'm gonna add now the 30-day moving average. So you see there, it's like the orange line. 30-day moving average, you see this one is far from the price, these candles at the price. So the 30-day is far from the price. So it's adding all the 30 days candles, take the midpoint, and then you will see it's more than the 9-day, which is close to the price, and this one is further away from the price. So what you do with this, the strategy is that when these two lines are close together, there's no movement in the market. The market is simply ranging. So you see the market doesn't have a direction, it just goes to one place. Um, for example, I'm looking for an area where this, yeah, for example, if we come here, there was not much movement. They cross and then they cross again. So the movement, like the price is not doing much. It's just moving in one area. And then when you see here from this point onwards, they break away from each other, meaning it's no longer the spaghetti situation that you see there. And then that's when you can see now the 9-day closer to the price, and then this one, the 30-day, moves away from the price. So we have a trend that formed in that there's a breakout. So if you had your support and resistance, you will have these lines, that line there, which was your support, and then there was a resistance there in top. So the sooner as we break that support there, we had price retracing, and then it didn't touch. So this support here became resistance, because when it went down and then it went up, and then from the resistance, that was the prior support, and then from there, as it couldn't break that point, then it went down. So you can see we had a lot of movement there. Let me bring this back where it was, because I wanted us to focus on that level there. So now that we have these two, 30-day and the 9-day moving average, what are you going to be looking at? You'll be looking at where these two crosses each other. So for example, if we go to the left, you see there was a cross there, and then price went to our level, and then it went up, and then it came back and then broke our level, and then it went down. So immediately when there was a cross, it's an alert that okay, the price is gonna go down. And when the price goes down, it gives you an indication. If you wanted to short this instrument, we're gonna sell from that point. But we are trading shares, so we won't be shorting any instrument. So we'll look only for buy signals. That is here. So when the 9-day crosses the 30-day moving average facing up, so that means we have a trend that is going down. So in this case here, when it crossed it to facing down, so it was going down, then it's an indication that the price was gonna go down. So in this case here, this is what we'll be looking for: the cross to the upside, meaning the bullish movement is stronger. So will be stronger. But the thing is, what you need to be looking at, this is not always effective, this cross. So the cross just tells you it's time now that your movement is gonna go up, your movement is gonna go down. So you need to have another indicator then, to confirm whether it's that's the point where you are buying or you are selling. So the indicator that we'll use is the Williams percentile, and then we're gonna have a 5-day period, and then the intervals would be -20 and -80. I've already have my Williams percentile here. So the Williams percentile, what it does, it measures the oversold and the overbought. So in the graph, the Williams percentile is at -20. That means we are oversold on the market. So the graph, sorry, it means we are overbought. So because when you go up, we buy. So when it gets to never -20, that means we have exhausted, all the buyers are tired from there. So whoever is coming on board is gonna come with a sell position. So we have oversold, and then we have overbought, and then we have oversold at the bottom. So the buyers will come when it's oversold, and then they buy, and then when it's overbought, the sellers will come and sell going down. So what you look for, you must be below 80, and then once when it comes from -80, and then it's moving inside, let's say you were at -95, and for example in this point you see there was -95, and then it goes inside below -80. So that means now the momentum is going to change, we're going to the upside. But the problem here, it might be risky to come in here, because you don't know whether the movement is still going to the downside, it's still a sell. So the perfect point will be to observe this area here. So when there's a cross, you look for up movement. So once you have a cross, there's a confirmation now that we're gonna go up, but we need the Williams percentile to go to -80, and then once it comes back from -80 going to -20, that's when we're going up. For this graph for here, it's difficult to trade this Williams percentile and the moving average, because you can see here it's like this graph, the easiest way to trade this graph is support and resistance, because there's been a volatile movement. It doesn't give a smooth trend. What I would suggest now here is that you wait for these levels. So I have a line here, so you wait for this level, because what you see, there's a strong resistance there. The market came to that level, couldn't break it, it went down to that region there. So we have a strong support there. So the resistance there is very strong. So what it looks that can happen if this cross here, this cross is successful, we have a confirmation that we might be going up. If this cross is successful and price manages to trade above 344, then there's hope that we can move up to uh, 38, to that region there. That is like 3877. So, because the thing is, you don't have much space to trade on. You won't be making a lot of money in the long term because you need to observe this graph. If we move from here to there, there's not much you can make there. So the targets are a bit um, limited, but if you can break this point, you can move from here to there, which is reasonable. So if you enter early and then you observe that line, but I would suggest that you wait for this line, because what it looks like, the market can move from there and then it won't just go straight and break this resistance there because it's strong. It might move and then what was the support here becomes your, what was the resistance here becomes your support, and then you move up, you take it from here to there, and then might move again and then to that level there. So it is a good buy, but I would suggest that we wait to see what happens when price reaches here, which might take a while. As you can see, the stretch between from here to there, so we're looking at maybe 3 weeks for us to see any results for price to break this level. Okay, I'm sure they will find a nice instrument that will be perfect for this situation here, because as you can see, it's difficult to say, to confirm to you that this is a nice buy because of the levels that the trading regions are a bit small. So for us, you can move from, probably if price rejects there, it can move down here, and then if it's successful, it can move to that level. So it's not much of an opportunity for now. So as we observe it and things change, so if we break this level, break that level, and then maybe there's a small retracement, and then that will be a good position to be in. But for now, I would say you sit back and observe. If you are already in, then that's good for you, because you'll be reducing the risk in case the price changes direction going to the downside. But for me, as you can see, the moving average is facing down. So I won't open any positions from here until I get a confirmation that we have a cross. Now it's good to trade, and then we're above that price at that level. Then I can simply take the position and then just observe this region here and price move up and down. So that'll be all for today. Please don't forget to send comments, and then if you also have other shares that you want us to talk about, leave the comment and then subscribe for more videos. I think that will be all for today, and then please watch out. I'm planning uh, to give more insight on these instruments, the Anglo-American, SPIN, NASPAS, and I want us to talk about those opportunities there. I think there was someone as well that suggested that they want to know what to do with those instruments. I think they are interested in buying those shares there. Okay, thank you guys. Enjoy.